Malaysia's economy is expected to expand by 7.3% this year, underpinned by strong rebound in exports and soaring commodity prices, say HSBC Global Research senior Asian economist. Robert Pryor-Vanderford, who is based in Singapore, said today the economy could grow higher than the Bank Negara Malaysia's latest forecast of 4.5% to 5.5% due to the sign of a V-shaped vigorous recovery in Asian trade cycle. He said higher growth was underpinned by strong consumer confidence in the domestic economy, as reflected in the rising asset market. Pryor-Vanderford said consumer confidence comprises 8% of the private consumption growth in Malaysia. Therefore, the country will see a very broad-based recovery in 2010. However, he said Malaysia might not be able to sustain this rate of growth.
4.5% to 5.5% I'm saying is the trend growth rate, sustained growth rate, the sort of growth rate that Malaysia would average over the course of an economic cycle. The 7% is what we expect specifically for 2010.
So it will taper off probably to 4.5 to 5 in 2012 and onwards, right?
Yes, it's the average growth rate we would expect over a, say, 5-10 year period. Yeah, so, and everybody, you come from a period of below trend. I mean, GDP fell 1.7% last year. Expected to grow 7% this year. In 2011, I think it could be above trend again. It could be in the order of 6% or so. But eventually, obviously, it has to come below trend again. And that's the nature of an economic cycle.
On the overnight policy rate or OPR, he expected the rate to rise at least 3% by year-end, adding that 3% to 3.5% is the ideal level for normalization of OPR.
We've obviously seen one move. We think it's the first of a series of moves as the central bank tries to at least normalise interest rates. We've got to bear in mind they are at very low levels, 2.25%. We expect them to go up to at least 3% by the end of this year, so at least another 75 basis points of increases between now and the end of 2010. How many hikes? Well, we've got 3 more 25 basis points hikes is what we're looking for. But it's not, it's not because there are huge inflationary pressures or anything like that out there. I think it should be seen as a sort of normalisation of rates from low levels.
On the ringgit, Pryor-Vanderford expected it to be firmer over the next 12 months.